Hey everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for January 7th, 2023. So let's go ahead and get just started right away. And we're going to go as usual, we're going to talk about the current market environment and then the stocks on our watch and ready lists. And we don't have any current positions, though we may be putting on some because we just went into a new confirmed uptrend on Friday after the big rally. So we'll see, but we're not there yet. So overall, we still have our stock environment indicator on red. And we do have the best strategy is still to be very short-term swing trading. And our recommended exposure is still about 10% or less. Now, why do we have this? Now, we had the big day on Friday. And we had, when it soared, the index has soared because of possible signs that inflation may be moderating. Now, we did see actually quite a lot of breakouts on our larger watch list, which I use to actually choose the stocks that go on the lists on our site. And that was a promising sign. We hadn't seen that in a while. We had so many stocks that just broke out, and usually by the end of the day, they're down, or they're something we call squatting. They just, if you look, they went up during the day, and by the end, they closed near their lows, or in some cases, just broke below their lows. Just signs that there was just no participation and no follow through from the breakout. So today we had probably 9 or 10 that closed at or near their highs, and it's a positive sign. So there's a plus to this beginning of this new rally. And then another plus is that we've had stocks that have been kind of on our ready list, then they fall off back to the watch list, and it's just been a lot of volatility and a lot of just up and down movement with no real trend up, which is of course what we want to see. We had most of that. Our watch list ended up on the ready list and at the top end of the range. So all good signs, but in the other side of that is that we're just not getting a lot of stocks. It's fine to have, 9, 10 stocks that have done this, but there's many, many thousands of stocks in the market, and we want to see a broad participation. So we're not seeing that yet. That's why we're saying this is a good step, but we're not there yet. And again, the rally on Friday was really powered by short covering. The shorts got a little squeezed, and they have to, of course, buy back their positions. And so that kind of powers it. And when you see these days that start off and they just get higher and higher and higher just as the day goes on, that's what's going on. There's also, we saw signs of the usual bottom fishing coming back in. So we don't have the confirmation yet, but some good signs. So all in all, we want to look for that character change where we're seeing the opposite of what we've seen. And we talked about this in other videos. We're seeing the breakouts that not only do they hold, they continue on. And there's more breakouts, and we're seeing that you can hold positions longer than just a few days, and this all is going to take time to develop. So, but in the one day, we didn't buy anything because there really isn't much to buy, and we're also just it's just been a poor environment. So, don't have FOMO and it's like, oh, why wouldn't we buy anything? Look at all the stocks that just took off on Friday. Well, we don't just jump in. We're always trying to be very calculated how we do things and not fall prey to FOMO and emotions. So anyways, we're on the right path. If the market is going to work, it's going to work for a while. It's not just going to be over in a few days and you've missed out. And in fact, if it does just fall apart, well, then you didn't miss out. So in fact, you probably saved yourself some money, which is, that's been the problem for most people this year, is that they get excited, the markets, they get FOMO and the markets are rallying these huge up days and they get in and then they end up with losses. And so many traders ended up with just, double digit, low, mid, and even high double digit losses. So we're avoiding that at all costs. So let's go ahead and go straight to looking at the stocks on our watch list. So give me 1 second. Okay, so the first one is LSI Industries. This is an interesting one. We don't usually like these stocks that are under like $15, but this one's actually been really making a nice move and a nice high volume here too. And a lot of strong up volume spikes above it's moving, its 50-day average of volume. So here, I think we actually traded this one. But anyways, we had another little breakout on. You can see here, it tried to break out, failed. See if I can draw a line. Yeah, so if I kind of draw a line across this top, you can see tried to break out here, failed. Now this is something when you see already a pretty big move without, and then it doesn't really form a base like here, just kind of broke out of a little consolidation, and then had some sellers came in and just tried to break out again. It needed more time to set up, and we just didn't get it here. So it came back down, tried again, lasted a few days, then we got shaken out, and then broke out again on Friday on nice volume too. So this is one we're going to watch. Not the easiest one to hold. I know I traded this one myself. I got shaken out here on this day. It just tagged my stop and just kept going. So that's what happens. But this is an interesting one. Nice earnings and sales. In fact, they're increasing. You know, this is pretty good for a small company. This is just a micro cap, $350 million market cap, and we're getting these really strong earnings and sales. So that's one to watch. It continues just consistently growing its earnings. And good overall ratings. They make outdoor and indoor lighting products and other business services. So that one's one we're watching. Now we may just lose this one. It's already come broken out. We're at the top of the range. So if it goes, that's fine. We just move on. It may come back into its base, and maybe we'll get it on a pullback. So we'll see. All these ones that we're going to look at, are almost all of them now, are close to we're past the optimal buy points. So next one is Schlumberger. Now this one and Halliburton are both in the oil and gas field services. So we're starting to see more names pop up. So we like to see when there's two stocks in the same group already starting to break out. Now this is the weaker of the two. We'll look at Halliburton in a second, even though Halliburton is a little better looking chart. So this one we still haven't cleared out to a new high, but we broke above this resistance level here, which was where our buy was. So it did break out there. We're right at the top of the range. I wouldn't buy it here. I think you're always trying to buy as close to that point as possible, just because when they pull back, your stop can be a little bit farther down than if you're buying here. To put a stop down here, you're already at like 10%, which is too much. So that's why you always want to get them as close as you can. And if they take off without you, well then so be it. Don't ever feel like you missed, because there's always opportunities. There'll be another one. There'll be if the market's good, there's going to be. You'll see when we get to that point when the market is really rip roaring. There's going to be way too many names that we can buy. You'll see 20, 30 names on our list. It'll be like crazy. And it'd be like, well, which ones do you buy? Well, we tend to buy them in order of breakout. And the first ones that break out, historically are going to be the leaders, though. You'll see ones that come up later on, too. So this one's looking good, too. Nice cup is formed here. Sort of we didn't really get a handle, but this is almost like forming a high handle or a base on top of the base. It's a little sloppy, but you see it tightened up here, and then it broke out. So that's one that's looking pretty good. Actually, let's go to Halliburton. I'll skip over one. Halliburton, you can see it's already kind of cleared this. Now, this one did have a cup with handle. Handle was a little deep, 18%, so that's a little bit of a red flag. We like to see it maybe 10%, maybe 12 at the most, but it's almost like formed another base up here, and it broke out. But it did you can see this kind of came down to here, then came down to here a little lower, a little tighter, and then even tighter here, and then it broke out. And we're getting this RS blue dot rating too, which is real strong. And so, anyways, it looks pretty good. So this is the other one in that oil and gas field services. So looking pretty good. Very strong overall ratings, earnings. Look at the earnings and sales. Yeah, very strong across the last 4 quarters. Nice. It looks like last 2022 we had a big breakout year from $1.08 in 2021. We jumped up almost 100%, and then we're now jumping up almost another dollar in 2023. So, there's a lot going on here. The company is really powering forward, and I would expect we're going to see that if it continues, in a much higher stock price. Okay, let's go back. I also go in order of relative strength, so I'm going to back to TJX. Now they have a whole bunch of TJX stores, TJ Maxx, and there's Home Goods, and I think there's another Marshalls. Those are all their brands. Now this one had a really nice setup. We had a big cup base here, which is we like to see. Then formed this handle. Now our charts here, this says a flat base, which is true, but it's almost like a handle with a 5% depth. So, because it's an algorithm that's drawing these, so they're not always 100% accurate, and that's why you need to get used to seeing and looking for the patterns, because in this case, I would actually call this a cup with handle, but real tight action here, and then it broke out, and now we're in this buy zone. Now this one is buyable. The buy zone goes up to, we have it actually to 81.90. Actually, I need to change that. Let's, we can go a little bit higher here, up to, if you had to, about 85. I will change that on our thing. But ideally, this is where you're buying it right here. So, but anyways, this one, if it's already extended too much, you can pass. But we're within 2%, 2.5%. I'd say this is still buyable here as long as it doesn't gap up and take off too much farther from here. Okay, next one is McGrath Rent Corp. This was a company I had never heard of until it sort of popped up on our screens, and they kind of do a kind of an odd collection of things. I've listed them as the diversified business-to-business rental company, and they have relocatable modular buildings, test equipment, and hazardous waste containers. I don't really see the synergy between these these things, but that's what they do. And let's take a look at the weekly on this too. So the big crash in the coronavirus crash, and it's come back and just kind of a slow grinder up. And we have the RS line new high was showing that it's making a new high while it was still in a base, which is very bullish. So it's now, you can see here, we had this cup with handle. The handle was a little sloppy, and it kind of tightened up. Then it just really just blasted off on earnings and just kind of held here, tightened up, and then broke out. But it got a little volatile towards over here. So we just have it on the watch, but it's right at the bottom of its buy range. So that is buyable. Now we're trying to, our buy range was a little bit lower. We are actually looking at 99. Yeah, we're kind of clearing this area here. So this is still buyable. Let's look at the earnings. Are just nice, steady grower. You can see $1, then $2, then $3, then $4. Probably going to hit $5 next year. Overall ratings, A's, upper 90s. Let's look at our quarterly earnings and sales. Yeah, it's just it's this company that most people have never heard of, and yet it's slowly but surely growing. Relative strength is 93, so it's outperforming all but 7% of stocks, or 6% of stocks. Yeah, and I'd say the only caveat on this one, it doesn't really trade a lot of shares, 111,000. So this is not one, if you are a big player, you would just be piling in with lots of shares. You'd probably, you don't want to be doing 10% of the daily volume. But for anyone who's just doing small amounts, that's not really a problem. The only thing you have to watch is that if sellers appear, they can push it down pretty quickly. But in this case, you don't really see a lot of real big down days. We're getting much more, we had some really nice up days. This is really the only real big down day I've seen here. Yeah, it looks like it's a good looking chart. So that's it on our the final stock on our watch list. TJX. That's why we have a typo in our notes, so I'm going to fix that. Let's go to the long-term outperformer ready. I'm sorry, that was our ready list. Sorry, I said it was the watch list. I'm sorry about that. Yeah, this is the ready list. These stocks are actually all in the zone, but we do have for TJX, there's a little bit of a typo there, so I will fix that. Okay, so in the ready list now, let's go to the long-term outperformer. We have a stock that's kind of shown up a few times. They're called CBIZ. Ticker is CBZ. And this one, we are trying to buy it. Let's go back to, first let's look at a monthly chart. So this is what we like to see, just a nice, steady rise. Of course, this is a coronavirus crash. This one quickly recovered and went on. Let's look at the weekly. Now, weekly looks a little bit stronger. See, it's getting support whenever it's pulled back to the 40-week moving average. And now we're trying to get it right off of the 20-week, which is around 46.50. And we have a 46.50 to 48.50 buy range. And so you don't see it on this chart, and it's a little compressed on this one, but that's the green line here. So if that holds, we're trying to buy it, and that's when now if this uptrend continues on, this is probably going to be looking like a real good buy. But it's been volatile around there. This is the first time it's come down to that moving average. It held over here earlier in the year, and so that's it's right on our ready list. And the stock is only 10% off its high, so that's actually pretty good. And they just do a lot of they provide financial, employee, and national practices service for businesses and individuals. Yeah, overall, pretty good earnings and sales. Overall numbers are all pretty good. I mean, it's a company that nobody's really heard of. And again, we're a little bit of a downtrend right now. This is where that moving average is. I would be buying it not on the pullback to that, which is where we are, but we want to see some strength coming off of this. So, and also the good sign though is this pullback has been a really low volume. So of course this is a lot of the holiday trading here. There's volumes low in most charts, but we don't see any real big signs that sellers are pushing this down. Now, of course, we are below the 50-day and the 21. So you have that kind of mixed technical picture. But when we buy these long-term outperformers, we're always trying to buy them, if we can, off of longer-term support on the weekly chart or even the monthly chart. And monthly chart, we don't really have anything right there, so we're using the weekly. So there's one there. We only have one more stock. When we go to our watch list, we lost most of the stocks. We're going to be looking to add some more, but we just have Cardinal Health. That's our weekly chart. Let's go to the daily. And we're trying to get it right when it goes back up. Basically, it's we're buying it a little bit below, right above this area here. Now we've come down. It's now below the 50-day. It popped up again on Friday. It's actually starting. We like this fact here. We had a big run. It started to tighten up here, and then it tried to break out. It wasn't able to make it. Now we're actually getting more volatility, which is not what we want to see. But the stock is acting, really pretty well. Overall earnings are good. Sales are actually better than earnings. We have a few negative quarters, but overall the company is just growing. They're a big player in branded and generic and over-the-counter drugs and consumer products. They make a lot of stuff that you probably use and are aware of. So we're just watching this. We want to see it hopefully come back up to this around 80, 81 area and tighten up and give us a buy from there. But it's looking pretty good. I mean, it was one of the better stocks. It's outperforming the S&P. We have an RS of 95, so it's looking pretty good. Let's just take a quick look here. Final thing, that's the monthly chart. Now this is not what we want to see for a long-term outperformer. It just really hasn't outperformed, so that's not giving us that for that. But that's not on that list. And then here you can see it's kind of a choppy trader, and then it finally started to break out here in 2022. So that's a good sign. We always like to see a stock that is starting to outperform most other stocks. Okay, so that's all the stocks on our list. That we're going to be probably adding some more over the weekend, and then on Monday we'll talk about those as we do some more screening. But yeah, don't fall prey to FOMO. If you miss all the current batch, that's fine. If you can get them a little cheaper, closer to the buy, the lower end of the buy range, that's great. But if this is going to work, if this rally is going to work, as I said earlier, then there's going to be plenty more stocks starting to appear. And one thing too, you can kind of gauge how the number of stocks that we're having on our lists and how the market is actually doing. So we're just not getting it there, but we have as I said earlier, we have some good signs. So that's the whole thing. We want to get all the signs lined up. We have no reason yet to be upping our exposure and jumping in after one day. It's nothing. And so we'll see what happens next week. But we may end up buying something if the conditions improve and we are starting to see better action from stocks, not just after the one day. Okay, that's it for this week. We'll be back next week. Okay, thanks a lot.